So we saw a deluge of tech IPOs last week. I saw you tweeting about it. So Snowflake in particular standing out with its shares soaring over 100%. What do you think these newly public tech companies, cloud companies, can expect in the near term?
Well, I think certainly the macro market is very volatile right now. So I think you're just going to see a probably dynamic range of prices, both on the day of IPO and the subsequent trading. And it's always, I think we're gonna have a lot of different narratives about did people leave money on the table? Did stocks go down or up? In any of the kind of trading periods. But I think the broader maybe macro thing that we're seeing is these are companies that in many cases were founded 7, 8, 9, 10 years ago. And they've now reached a scale with even more of a tailwind right now because of this move to digital. And in many cases, these are companies going after incredibly large, multi-billion, multi-tens of billion-dollar markets that have, a tremendous amount of growth going forward in front of them. And so I think you're just going to continue to see this IPO pipeline because over the past decade, we've seen dozens, if not hundreds, of very disruptive enterprise software companies emerge and get funded and really be able to reach scale.
Now, you compared Snowflake to Google, and I'm curious, how much bigger do you think the market can get? I mean, do you think we could look at a Snowflake in the future in the same way we look at Google today?
I'm not gonna. I don't think I can make any kind of stock trading, tips on this on this chat. But what I would say is, to me, it was more of just the sheer amazement of. I remember Google being this jaw-dropping valuation and kind of game-changing and a historic IPO in terms of their scale, and then you have Snowflake, which is I think in many cases a company that is not necessarily known by consumers generally, but it's a very disruptive enterprise software company. Actually, going out and going public larger than Google did. So it's to me, I just think a profound statement about the power of the cloud, the scale of these opportunities. Obviously for Snowflake to be as big as Google, a lot of other things would have to happen in terms of their portfolio. But more of just the size of these companies, the markets they're going after are so enormous. And we would not have probably anticipated that 5 or 10 years ago. If you had said, are you going to see an enterprise software cloud company that doesn't exist today back in 2010? Going public at 60 or 70 billion dollars, I don't know who you'd be able to find that would say yes to that. So these markets are enormous. The opportunities for disruption only continue, and I think we're just going to continue to see more and more companies go public.
Well, we've got Airbnb coming up, Palantir, Asana, and there's this debate that's continuing to rage about pricing, how much money was left on the table. If they are so focused on institutional investors, do you think those investors are really that valuable at this point, given how much liquidity is out there? I mean, do you think they could have raised the price? I mean, a number of these companies could have raised the price and raised a lot more for themselves.
I probably am a little bit on the opposite end of the side of Bill Gurley on this. First of all, I think it's great that there's lots of different ways to do an IPO, direct listings, and more of a traditional IPO. I think it's fantastic that the market supports different approaches. Now you have SPACs in the mix as well. But I would for us, we went public with a fairly traditional approach. Our stock went up by maybe 70% or so in the first day of trading. We didn't really feel like we left money on the table. We were happy to be public. We got great investor support. I think a lot of times some of these things are easy to look at in retrospect. You don't often know that just the sheer demand, for a new public offering at the start of the IPO process. So, some of this ends up being, I think, easy to be able to comment on after the fact. But also, I just think, from an entrepreneur and from a company and corporate standpoint, I think your biggest priority when you're going public is making sure you can educate investors, building a strong set of support in your IPO process. And I think that, sort of incrementally leaving 10 or 20% of financing on the table is not usually the most important factor that you're focused on. Maybe it should be, which is, again, why it's great to have these different points of view out there.
Now, the biggest near-term cloud news could come out of TikTok, and surely Oracle is an unlikely partner, stakeholder, whatever you want to call it, though it's also a political hot potato. How do you weigh the sort of benefits of, an Oracle bringing that into its portfolio?
Well, I think in general, first of all, we're only going off of what we hear from the U.S. side of the conversation. And I know that there's different views on the likelihood of success of this, from the China side. So, but based on the latest information, I'd say it's probably a win in all accounts for Oracle. I don't think there's a single negative on their end. They get a large cloud customer. They have an ownership stake as opposed to maybe what initially was perceived to be a kind of an acquisition or operational stake in the business. So I think from a pure corp dev standpoint, you might see an appreciation on the equity value, as well as have a large cloud customer that's going to just push your platform forward, make sure that you're continuing to innovate. I think that all those things are great. One very brief aside on Larry Ellison specifically, I think it's sometimes is forgotten that in the 90s, there were actually multiple efforts to get into consumer businesses, built on the Oracle platform. So this is actually not as crazy as it looks, from afar when you just think about Oracle, only on the dimension of enterprise software. But ultimately, I think Larry has been very sort of strategic in timing consumer markets that can get backed by enterprise technology. In the 90s, it was the internet superhighway and leveraging the television box and cable box to be able to distribute information powered by Oracle. So there's been moments where this is actually has some precedent within his strategy. But I think in general, it's probably a good move for Oracle. I think there's a broader issue that I have, which is really just the precedent that this could set for geopolitical dimensions to the internet, and I think there's a lot of risk in that. So I think the greater concern for me is what happens if other countries start to look at the U.S.'s actions in this space and try and replicate that for companies doing business in their country. And what you could imagine is a very unsustainable approach to having an open internet, where you have very kind of balkanized silos, where not only just data has to be stored in region, but you actually have to have ownership and operational control within that specific region. That would be a nightmare for most global internet platforms. One of the powerful things about the internet is that a company, generally speaking, can do business anywhere. And while there are plenty of cases to be made that that's not true in China, the issue is that I think a lot of countries look to the U.S. to setting maybe a better internet standard, and now we're definitely kind of easing up on that, and that's to me the greatest risk of this transaction.
Now, enterprise software companies have historically relied on these huge sales conferences to drive sales of the software throughout the year. You just wrapped BoxWorks, which is normally this huge.
We're pivoting.
Okay. You just wrapped BoxWorks. Yes, we're going from TikTok to BoxWorks. That's what I just did.
Okay, good.
Which you just wrapped your big, enterprise software conference, and you had to do it all virtually. And I'm curious, how did it go? What did you learn? And do you think that these big conferences are going to return in a post-COVID world? Do you actually need to do them?
It's a great question. I do love the very smooth segue from TikTok to enterprise software conferences. So we did just have our virtual conference last week. We saw somewhere between 4 and 5x the scale of registrations that we would normally see in one of our physical conferences, our annual conference. We saw higher engagement in a lot of areas than normally we would see. Overall, great levels of attendance and engagement on our keynotes and product updates. So at certainly, as you can imagine, much lower cost, much easier way to get this content out to our customers. So I think there's a lot of benefits to a virtual conference. We're able to hit maybe demographics of our customer base that maybe previously wouldn't have been able to go and fly out to San Francisco and come to Moscone for a 2 or 3 day conference. So there's real benefits of the scale of impact of customers we can make sure that we interact with, that we can engage with. There is, a difference in terms of being able to have, conversations one-on-one with customers. So it's a different experience from that standpoint. But I think we were able to make do with the environment, which is you had to move to virtual. Now we're really asking the question, well, okay, how does this look in the future when you can actually have physical conferences? Maybe it's next year, maybe it's the year after. Do you still rely on a virtual first environment? Do you have a bit of a hybrid conference? These are some open questions that the industry is going to have to ask. But overall, I think we were very happy with the success of the event.
Now, you've got customers ranging from Morgan Stanley to AstraZeneca. We do know for sure there's more uncertainty ahead. What are you mapping out? Are you mapping out like a mass return to work or a prolonged, distributed, perhaps permanently distributed and virtual workforce? And what does that mean for business?
Yeah, so I think probably at each stage of this pandemic, I've been wrong by like 2 orders of magnitude on timelines and amount of impact. So I'm probably the last person anybody should look to on predicting this stuff. But you know, in general, what I actually think our approach has been, and what we've seen from the best customers we work with, is it behooves organizations to have a focus on flexibility and resilience. And so that way you don't really have to make accurate predictions on, you know, when are people going to go back to the office? When are, you know, when are things going to kind of, you know, quote unquote, open up from a business standpoint? So I think when you look at it from that dimension, which is we can't be in the business of predicting this because there's so many factors in terms of societal, healthcare factors, vaccine factors. These are not things that any one individual business can go and predict. So it's much better to set up your organization to be resilient to being able to, you know, remain in a remote world, even when offices, you know, do start to open up and when people want to have more flexibility. So I think, you know, it's definitely, we're in the middle of next year, almost no matter what, at a minimum, because schools and the school season is sort of forcing companies to have to make sure that they have long-term flexibility for parents that have, you know, kids at home that are doing remote classes. So I think we're in the middle of next year before you see, you know, really any kind of at scale opening up. And even that would only work with the healthcare crisis being resolved in some degree between a vaccine, you know, therapies, you know, for remediating the problem, or, you know, just wholesale mask wearing and social distancing techniques. So, but at a minimum, the companies we talk to are seeing the benefits of productivity in this environment and expect that they want to maintain some of that going forward, even when offices do open up.